Hi, so these are the points for need for material management. First one says increased cost of raw material. This means to say that we have different costs associated for producing a product. For example, what do I say? 100 rupees is the cost of producing this mouse. For instance, 100 rupees is the cost. A major portion of 100 rupees is your material cost, maybe a 50 to 60%. So if this thing cost 100, okay, this is the total cost of producing this unit, and when I say material cost is going to occupy at least 60 to 50%, we mean to say the material cost in involving this mouse is 60 rupees. Okay, now 100 rupees, 60 rupees is your material cost, 40 is the other cost. So which is more? Material cost is more, right? You need to understand, if I make a profit of 100 rupees, or see, I make this product at 100 rupees, I sell it for 200 rupees, I get a profit of 100 rupees, right? My business is not going to do business only for 1 month. It has to do good business in the next month also. In order to do good business, I need production to happen next month also. For production to happen, I need to purchase the raw material. So from the profit which I got this month, I'm going to spend more for the material for next month. Is it clear to you? I spent 100 rupees in making the product. I was able to sell it at 200 rupees. 200 minus 100, 100 rupees is my profit margin. I'm going to use this 100 rupees and use a major portion of that profit in purchasing raw material for the next month. This is how it normally happens. So from here, what did you understand? Material cost is very crucial to the organization. Why? Again, for the same reason that materials cannot be overlooked. You need materials in order to have your production. Without materials, you cannot do production. So a major portion of your profit for the next stage, or for the next production cycle, would comprise of your material cost. This is why material management is very important. Second one, scope for reducing cost and improving profits. This means to say that, for example, this mouse cost me 100 rupees, out of which 60 rupees is my material cost. Okay, I'm able to sell this mouse at 200 rupees. 200 minus 100 would give me 100 rupees profit. Is it clear to you? Yes. Now what do I do? That is, this month cost was 100, raw material cost, in that rupees 100 total cost of producing this product, 60% or 60 rupees comes as material cost. Next month I'm going to try controlling this material cost. So what do? I try to decrease or lower the material cost. How can I do it? Either I get into terms and a negotiation with my supplier, or else I'll go for a different supplier who gives me at a lesser rate. So when I go there, I understand that my material cost which I incurred for 60 rupees is going to come down to 40 rupees, which means I have saved on 20 rupees. Okay, is it clear to you? So my total cost would be now 80 rupees because I reduced 20 rupees, right? So 100 minus 20, this month my my cost of production is going to be only 80 units. Okay, so my cost of production reduced by, when I tried reducing the material cost, my cost of production also reduced. Now I'm going to sell this mouse at 200. 200 minus 80 is how much? 120. Last month, when my material cost was 60, I got a profit of 100. This time when I reduced my material cost, I got a profit of 120. What does it mean? When I reduce the material cost, I will get more profits. So this is used as a tool. That is why material management is very important. I hope it is clear to you. Okay. Third point is important constituent of current assets. What does it mean to say is we have certain assets, right? What is an asset? Anything which gives you a future benefit to your organization is called an asset. Asset can be divided into two: fixed assets and current assets. Fixed asset is mostly your plant machinery, your land and building, which is stationary and which would give you benefit for quite a long period of time. But current assets are those assets which give you benefits only for a shorter period of time. You've learned all this, right, in accounts. So materials would come under which one? Fixed asset or current asset? Current asset, because the asset which you purchase, that is your material, can be used only for that particular production period. The next time the period changes, you have to buy more material. So if today I purchase the material, it is going to help me only for that one cycle of production. If I want to start the next cycle next month, I'll have to purchase more material. So therefore material is a current asset. Okay. Now the concept about material management is it forms materials is that the materials is a very important current asset. If you have more control over current asset, this is going to increase your profit. In my description given below, I have given you a ratio. It is called as ROI or return on investment. How does it happen? Suppose I have built a factory. I am planning to start a factory. I go to you people, all of you. I ask, okay, please invest some money in my uh, business, because I'm doing a very promising business. I'm going to earn a lot of profits by the end of this year, and you will get a lot of dividend and a lot of returns. People say this, right? People ask you to invest in their venture so that you get a lot of returns. They promise you a lot of returns. So in the same way, I'm going to promise you a lot of returns. Is it clear to you? When you want a return on the investment you made in my business, we call it as ROI or return on investment. Is it, okay? Okay, now ROI, what is the full form? Profit by sales into sales by fixed asset and current asset. Please see the formula, you'll understand. Okay, now ROI is equal to profit by sales into sales by fixed asset plus current asset, which is your total asset. Is it clear to you? Now the first part, what does it tell you? Profit by sales, which means profit per sale unit is given in the formula. Profit per unit is given in the formula. Profit by total number of sales. Suppose my profit is 10 lakhs. Okay, I have sold 500 units. You divide it, you get the profit for 1 unit. Okay, 500, for example, 500 is my total profit this month, and I have sold 5 products. So 500 by 5, 100 rupees is the profit of 1 unit. Is it clear to you? That is there. Into sales by fixed asset plus current asset. Is it clear to you? Fixed asset by current asset. Suppose my sale was how much? 5, right? 5. 5 was my sales divided by fixed asset and current asset. Okay. My fixed asset is 1 rupee. My current assets is 3 rupees. What is 5 by 3? That would be somewhere 1.25 something, 1 point something. Yes. Okay. Is it clear to you? 5 by 3, it gives me 1 point something. What is this 3? 1 plus 2. Fixed asset plus current asset. That is 1 plus 2. Raw materials come under current asset, right? Current asset is 2. Raw materials come into picture, in which I try to reduce the cost of raw materials. So my current asset goes back to 1. Is it clear to you? Okay. Let's do one thing. I'll just write it down first. Sorry class. Okay, okay, I hope it is visible. If not, let me know. Okay, in the first part I've given the ROI formula, profit by sales into sales by fixed asset plus current asset. You see the formula there? Okay, so my profit is 500, my sales is 5, again my sales is 5, fixed asset is 1 rupee, and my current asset is 2 rupees. Material constitute current asset. Okay, is it clear to you? Okay, now what is 500 by 5? It gave me 100. I hope it is visible. 100, right? Okay, and fixed 5 divided by fixed asset plus current asset, which is 3. 5 by 3 is 1.6. What is my ROI? 160. Now you have to remember material is a main constituent of your current asset. I'm going to reduce the cost of material because I can control my material cost to a certain level. So in the okay, yeah, in the next one it is 500 so I'm going to reduce the current asset from 2 rupees to 1 rupees. So what do? That is, I have reduced the material cost. 500 by 5 into 5 by 1 plus 1, which is 500 by 5 will give me 100. 5 divided by 2 will give me 2.5. My ROI is now 250. So all your investors will be happy when you have a higher rate of return. Okay, so when I reduce the material, which is a very important constituent of my current asset, I got more returns. My investor are happy. Okay, I'll type in this thing, only then you guys will understand, but never mind. Now fourth point is materials add value to a product, which means to say that on a general thing, for example, when I get materials to my factory to produce something, okay, and I land up with a finished product, the difference between the cost of my finished product and my cost of material is called as value added. What does it mean to say? What a manufacturing firm does is it gets materials for you, okay, you make something out of it. Okay, it gets materials for you. You try to, what do you try to do it? It gets material for you. You do your conversion process, you transform it, and you make it into a finished product. Now, your finished product would have a higher value than your material value. Okay, the difference between your finished product and your material is called as margin or marginal value or your value added. So materials form an important constituent if a factory or an organization wants to add value to a product. Simple logic. You don't sell the material, right? Do you sell the material to your customers? No. That is to the customers who want the product. That is to your consumers. You don't sell the material. You sell the finished product. Why? Because your finished product has more value than your material. What a factory does is it brings material, it adds value through its processes, and then when it sells the finished product, and when the finished product is sold, that is being sold to the consumers. So therefore, finished products would have a greater value than your material. Fine. The last one is, the fifth one is contribute to the quality of end product. This means to say that if you want the right quality of product, see, when you try to purchase something from a brand, okay, and you want this product, you want this, what do I say, very good product, only if the materials used in that used in the manufacturing of that particular product are of good quality, only then my product will turn out to be very good. Therefore, the right quality in the right quantity materials are very much important if you want your product to have very good quality. So this means to say that your product will only do well when it comes to quality only if the materials used are of good quality. Is it clear to you? Okay. Center of accountability for performance, which means to say that we have a material management department. We have people working in that material management department. We have material managers also. So when you try to identify one department or one functional department in your organization who's solely responsible for material management, it makes things easier. For example, when you have a college fest, you will give one set of students, you'll place it under registration committee, one set of students for tabulation committee, one for food committee, one for event like the event heads. So they are being divided so that it is easier to manage the whole fest. So in the same way, when you have one management department or one functional department which will work only for the material aspect of the business, material acquisition aspect of the business, we say that if there is anything any issues with not getting the material management, who is accountable? That department can be accountable. If you did not have a material management department, who all can you blame? You cannot blame the production people, you cannot blame the service people. Not blame as in they are not answerable to it. So it is very important to have one center who is solely responsible for material management so that they are accountable and responsible for the same thing. Okay. Conservation of materials. Now many of the industries use materials like coal, iron, steel. Okay, all those are non-renewable resources. We must have learned in EVAs also, and you're currently learning EVAs as well. So these materials or these resources get extinguished very quickly. So because of the environmental issues, which is also there in the next point, it is very important to understand we have to learn to conserve these non-renewable resources. Otherwise they'll get they'll get exhausted. We might not have them in the future, such as your coal, your iron ore, steel ores, a lot of different minerals also. Okay, so it is very important to conserve materials. That is why you need material management. And the last point is what? Environmental safety. If you go for excessive mining in order to get materials such as minerals and ores for your industry, yeah, for your production everything's happening smoothly, but you are threatening the balance of the environment. Environment would have to face the consequences, and ultimately you will end up facing the consequences as well. So even though you want the materials, you want to extract your raw material, still you have to keep environment protection and safety with deep regard. There are many laws, many legislations worldwide as well as for the specific country which ensure that environment is being protected. So those standards have to be kept in mind. Material supply, equipment are the very lifeblood, which means to say that, see, I'm repeating all over again. If you want production to happen smoothly, materials should be there. If it doesn't happen, it's going to be a problem. Clear? Then, development of good relation with supplier. Okay, your payment record, like you need to give good payment to your supplier. You have to give timely things to your supplier so that the relationship between the business owner and the supplier is improved. Okay, if I am not paying, like since the past 5 months I'm not paying my supplier really well, I am like, okay, I'll give you the payment, but I never end up giving the payment. So the relationship is kind of worsening day by day, right? What if the supplier is tired of all this and he decides I'm not going to supply any material to that business owner? Then I'll have to go search for another material resource, or I have to search for another supplier. So what can be done? I can work on the relationship with me and the supplier so that there is a mutual understanding between us. In times of need or in times of emergency, that supplier is always ready to help me out. So such should be your relationship with suppliers and the business. For that, they need to see to it they're paying all the bills on a regular basis. Okay, this keeps the supplier happy and in the long run the business owner happy. These are the points for need for material management. Thank you. Okay, so now we will talk about different objectives of material management. Okay, so material management objectives can be divided into two types: primary and secondary. Okay, primary objectives are those objectives which contribute directly towards the cause of material management, but secondary objectives are those objectives which would help in fulfilling the primary objectives. Is it clear to you? Primary objectives are those which are directly contributing towards material management, and secondary objectives are those objectives which help in fulfilling the primary objectives. Okay, so normally like when we talk about material management and we tell out the meaning of it, we mean to say that materials should be there at the right place, right time, right cost, and right quantity. Okay, so when we think about these concepts, we come out with different objectives. Now, what is the first one? Low prices. Okay, normally when your favorite brand gives you, say, a discount of 70%. So if you are, for example, if you are using a Puma good, you are fond of buying Puma goods, what do you do? Puma or Puma, I'm not sure. Okay, what do you do? Whenever you see the 70% or 80% discount, people have a tendency to go and buy goods from that store. All right, I'm not familiar with brand names, so it's a problem. Okay, so that is when you find that low prices are being set, discounts are available, you are more than ready to go and purchase, be it this brand or any other brand, even your trends or whatever. You always feel like purchasing when they offer you different offers, yes, and different good discounts, reasonable discounts. Okay, so in the same way, the material management department should also try to find out which supplier, okay, and which what do I say, which source basically will give you materials at a lesser rate. All right, if you don't, like in our previous point, especially related to importance of material management, we learned about certain concepts like the cost, material cost is more in a total cost. If total cost is 100, at least 60 rupees come under material costs, at least 60% come under material cost. So if you don't have a control over that material cost, your profits are going to differ. I gave you an example where from 60 the material cost comes down to 40, which makes the total cost as 80. 100 minus 20, 80, right? So that increases your profit margin. You go to my previous slide, you'll get the example right. So it is very important to understand, since material cost has a huge role in your total cost, you need to learn how to control. How can you control? By purchasing raw material which are of good quality at lesser price. Second point, high inventory turnover. When you say turnover, which means release or outside movement of something, you can call it employee turnover. Employee turnover is where every year a lot of employees get inside and a lot of employees during the same period tries to leave the firm. That is called as employee turnover. In the same way, inventory turnover, which means to say you need to have inventory with you, but also your inventory also has to move out. It cannot stay in one place. For example, this month being April, yeah, I purchase inventory or materials worth of 50,000. I purchase materials worth of, no, not 50,000, 1 lakh. I purchase materials of 1 lakh. Okay, but my sales target and the sales which I do ultimately in for the month of April is just sales of worth 50,000. Okay, in a way that I'm only using half of the material in order to sell the product. This is my scenario. 50,000 is my inventory materials that I have. 1 lakh is the amount of materials which I purchased to keep in my inventory. Okay, and 50,000 is what I plan to do sales for. Alright, what does it mean? I'm holding more inventory than the sales. That is not good for the firm. Why is it not good for the firm? I have invested 1 lakh for your inventory, but I'm making a profit of say around selling units just for 50,000. There is huge capital which is sitting idle in the form of inventory, right? I purchase material for 1 lakh, I do sales only for 50,000. My 1 lakh, even though my sales are not crossing 1 lakh or they are not even 1 lakh, that much of money is being piled up as inventory. If I need some money now, I cannot go take the materials, and it's no surety that I can sell them and get money. Or my capital is kind of blocked in that inventory of material. So what do I have to do? I have to set a optimum minimum level for my inventory. I need to ensure that any time in my factory such and such amount of inventory should be there. Anything excess than that, which means to say my material management is not proper. You get the point? Okay. When I understand that a lot of capital is being blocked in the material side, and my sales compared to the material is very less. Where's 1 lakh, where's 50,000? It's almost half, yeah, it is half of the quantity. So I need to see to it inventory is kept at a level which is below the sales, so that we call it the optimum inventory level. We have different methods like EOQ, which you will learn ultimately in order to maintain the inventory at a normal level. If I don't do it, a lot of my capital is blocked there, and it might stay idle for a long time. This adds on to my cost. Is it clear to you? Okay. Third one, low cost acquisition and possession. Now when I bring in materials, okay, and when I keep it in my warehouse or somewhere near the factory, costs are involved. Those are called as storage cost, your acquisition cost, or your possession cost. Okay, the cost incurred in storing the inventory of material has to be reduced. Okay, suppose yeah, my acquisition or my possession cost is 20,000. My acquisition or production cost is 20,000. Okay, now I have around, let's say, yeah, I'm just trying to find numbers. My total cost is 20,000 for holding that security in my place, like properly handling those secure material, not security, material. So if that's the case, and my total cost for each month is 20,000, okay, I have 400 units of material with me. 400 units of material will cost me a total amount of 20,000. Is it clear to you? Would cost me 20,000. 20,000 divided by the total cost divided by the number of units will give me the cost per unit. 20,000 by 400. So cancel 1 0. No, cancel 2 zeros. Sorry, I am bad in math, so I had to calculate. 20,000 is my total cost. I'm keeping inventory, say 400 units. Okay, 20,000 by 400 will give you 50. Okay, so 50 would be my cost per unit. All right, how do I reduce this cost? 400 was the number of units. My total cost was 20,000, but the cost per unit is 50 rupees per unit. The total cost divided by the number of units is 50 per unit. How do I reduce this cost? What I can do is increase the number of units. From 400, if I store 500 instead, 20,000 by 500 will give you rupees 40 per unit. So when we had 400 units, it cost us 50 per unit. When we had 500 units, it cost us Yeah, 40 per unit. Okay, I'm so bad at math, sorry. So this means to say if you have more of inventory, this can help you in reducing your material handling cost, acquisition cost, or possession cost. Almost all of them are very much similar. It's a cost of, storing those materials as your inventory, maybe in your warehouse or in your factory. So when you do this, what does it mean to say from this example? That if you increase the number of units, your cost will come down. But again, if you increase your units like anything, it is very much contradictory to the previous point, which is high inventory turnover. You cannot store a lot of inventory. So those two things have to be balanced, and in a way, material management department should, chalk out a way to understand and solve this problem. Okay. Next point, continuity of supply. If material is not present, if there's a shortage of material, production will not happen. There would be a delay in production. So what do we have to do? We have to go for suppliers who are, who has a record, maybe a past record of supplying material on a very much prompt and timely basis. By morning, I understand, okay, I have materials, let me start production. I set up all the machines, I give the switch on button, and production happens from morning. Around 12 o'clock, I realize, oh my god, I don't have materials which are for the, for producing any other unit further. So I had actually compromised on my material supply. Earlier, if I could have analyzed the shortage, I wouldn't have to think like this. I wouldn't have to stop my production because material is not there. How will you produce? Yeah. So if I had thought about all this, if I had analyzed whether I will have a shortage, things could have worked out better. So what does it mean to say? In order to check that your production, in order to have your production happen on a continuous basis, you should also check there's a continuous supply of raw material. Is it clear to you? Okay. Consistency of quality. We have repeated this point previously. This means to say that if you want to check the quality of your end product, of your finished good, the last product, you should also understand your raw material used in producing that particular product has to be of good quality also. Only if those are of good quality, your product is going to turn up having the necessary quality standards. Is it clear to you? So what can you do about this? One second. What can you do about this? You can see that what type of material do you require. For example, if you take cement industry, all the factories which are dealing with the manufacture of cement will require the same raw material. Okay? Right? They might require the same raw material. So we can say that this raw material is homogeneous, or every industry in that, no, every factory in that industry requires the same raw material, right? So those raw materials are homogeneous. Those raw materials are homogeneous. So the suppliers who would be giving us raw material in order to make that cement product, those are the same. So the suppliers would see to it that the quality is common. Okay, so we would get good quality. Now you take a case of a satellite. If you have watched the movie Mission Mangal, you will understand. We have a team of scientists who are working on different things. Like sometimes they have to see which material to use. There is this one scene in the movie wherein, in order to bear the extreme temperature, the oldest guy in the scientist group, he goes by the road or something. He sees being the plastic which is found in oceans or something. Yeah, you see the movie, you'll understand. Yeah, so he says that even though it is a pollution, it's a cause of pollution to the world, it is a solution in order to make the satellite, and he tries to get it here. But in order to withstand the heat and temperature, they are thinking about what type of material should be used in order to reflect the heat or something. That is when another girl who's there, I don't know her name, she says that it is better that we go for this material called Wolverine, which If suppose there's a tear, it heals back. So if you have seen the movie, you might relate to it really well. So these things, they are very much rigid when it comes to specification. Those specifications are not common for all the industries which make the satellite. It's very much relevant to only that particular industry. So when they have a lot of specifications, especially in while you make a satellite, how should the panels be, what should be the receptor, what type, and all that, those are discussed in that movie, so you'll get a better understanding. So there are certain industries which require that there should be raw materials which are of good standard. Okay, only if the quality standard is maintained, your end product is going to come out very good. Okay, so here we are comparing an industry like cement industry, where all your raw materials, most of them are homogeneous, and then you're comparing with the satellite making one, wherein all the specification for each raw material is very much different. Specifications are too strict, they cannot change from it, otherwise their product would get spoiled, the satellite not might be functioning properly. So all those have to be taken in regard with the type of industry that you're dealing with. Next, low payroll cost. Low payroll cost is the salary which you pay to your employees. Okay, every organization tries to understand or tries to have this fact in their head: let's pay less to the employees and keep more of the profit with us for different purpose. That ideology is there, right? That is why many of the people, especially who work in corporates, are not happy with their salary. Some of them, not every organization is like that, but there are some who are like, who are paid the same 20 to 23,000 every month, no, all through 3 or 4 years. So an organization would always try to cut down on the salary, on this payroll cost. Okay, 1 second. Okay, an organization would always try to cut down on this payroll cost. So what happens is, this is an ideology which works against the interest of workers, right? What can an organization do? If your profit per month can be increased to 10%, okay, if your profit per month can be increased to 10%, the remaining, how much see, for example, your profits for this month can be increased to 10%. You should also understand you can also increase your payroll cost in a proportionate manner. Okay, we can have an analysis like this: if profits increase by 10%, payroll or the salary paid to the employees can also increase by 5%. This is very much relevant in those industries which are involved in direct sales. Okay, when they increase their profit, employees get a bonus. They get something called as a bonus, which is an extra incentive like salary. Okay, so this means to say that if you want to lower your payroll cost as per the level of profit, you increase the, if you get a increase in the profit, you have to increase your payroll as well, payroll cost or the salary given to your employees as well. This keeps them happy, this keeps the organization happy. If profit is increasing 10%, you are not paying 10% hike in their salary, you're paying only 5%, a proportionate change. Okay, so this can be practiced. Next point, favorable supplier relation. Your relation with the supplier and say the company is very much relevant in material management. Why? For example, in the case of cement industry, if the same supplier, okay, is giving the same raw material to all the industries in that particular, all the cement industries in that particular area, which means to say this person has a lot of good contacts. Is it clear to you? Yes. If all the industry factories in that particular area, cement factories, are using the same raw material from this person, he would have good contacts, good market knowledge. He knows how the demand is, how the supplier a supply is. Okay, so if a person who has, if any company has a very good relation with the supplier, he can even get to know what his competitors are doing, because this guy is supplying, he'll know some knowledge. If they are like very close to each other, they information can even get passed on, even though it's not meant to be a very good thing. I'm so sorry, it's not meant to be a very good thing. Still, this can work sideways also. Okay, another fact where they can actually, where the supplier company relation is given a lot of benefit is where, suppose the relation is very good, the supplier might even tell the trade secret of how to make the raw material also. Okay, so these information can be constantly passed. And finally, if the company plans to cancel the order in the last minute, any other supplier, they might just give them properly, say that this was the contract, you are doing this is not fair, we'll take you to court. But if it's a supplier which with whom you have a very good relation with, and if you plan for a last minute cancellation of your order, then they might comply. They say, okay, we'll do it next time. That's it. So this is where favorable supplier relations are very important. Then development of personnel. There are a lot of people who are working in material management department. So, and among those people, there might be people who are kind of showing leadership qualities. Okay. As a senior level manager, you should understand who are the people who have such leadership qualities. How can we work towards developing them? The benefit of 100 brains working together for your organization would help you withstand any source of competition. It will help you survive in the market. So that is why human resource is the most important resource in an organization. Alright, yeah, material is there, finance is there, but human resource being very dynamic, you never know what are they going to do. Quite highly unpredictable. So in order to see what can be done with those, you have to see to it that human resources have to be given proper training so that they can develop on their own. You need to identify people within the department who exhibit leadership qualities, and when you find these, you can give them a higher post. They are happy, you are happy. Okay, the last one, good records. Now, in order to purchase raw material, purchasing department is given funds by whom? By the company, right? Company would be giving them money so that you can go and purchase purchase different material. Now, if there are certain corrupted people, for example, those people who feel like even though the purchase was made for 50,000, I'm going to write in the book says I made a purchase of 1 lakh. This is fraud. Okay, this is where they try to take the money from company without letting them know. They're going to steal the money. They're going to commit in fraudulent. They're going to do fraudulent activities. So what can be done? They have to see to it that the company's money is being used wisely. They cannot show wrong figures. So these are the primary objectives of material management. Secondary objectives. Okay, the last one is not seen. The last one is acquisition. Alright. Secondary objectives. First one is reciprocal relation. Reciprocal relation. For example, if I am a textile factory owner and I am taking raw material from you, let the raw material be thread, okay, to make the products. We can enter into an agreement wherein if you supply me enough raw material, I will make the product, I will sell it to you or give it to you. You can go and sell the product. Even though you are my raw material supplier, I'm giving an offer wherein if you sell the thread to me, I will make the products, I'll give it to you, you can sell it and you can get your commission. Okay, this is where a material management can work on the relation with supplier. So supplier is happy in making extra income. Material, I am happy because I don't have to depend on anyone else, like maybe a sales department not required. I can simply give it to you, give you the commission and take the profit for myself. Yeah, so it is very necessary from a business point of view to maintain such reciprocal relation. Reciprocal relation is like a interchange sort of thing. Like I get a benefit from you, you get a benefit from me. We should have a mutual benefit. Okay, next point is economic make or buy. For example, I'm taking this thread from you. Okay, I'm taking this thread from you. You are selling me, say, 1 ton of thread at rupees 400 per ton. You're selling it to me at 400 per ton. I Google and I find out the technology on how to make this thread. Okay, so remember, I'm purchasing this raw material from you, the thread, at 400 per ton. Okay, I try to search and I try searching and I find out on Google, and I think about what will happen if I produce that thread. When I start thinking, when I analyze all the costs, it comes to like it costs me rupees 300 per ton. So if I purchase the same thing from you at rupees 400 per ton, same product from you, it costs me rupees 400 per ton. But if I try making it on my own after knowing the technology of how to produce the thread, it costs me only rupees 300. Okay, I will try to do it on my own. Rather than buying it from you, I'll try to manufacture or make it on my own. So this decision is very much crucial because this one also gives you tax benefits, yes, but it also saves you on the cost. So rather than buying it from you at a higher price, if I can make at a lower price, I'm happy to make it. I don't need you now. Yeah, okay. The third, the fourth, and the fifth point. This is a function of the engineering department, and we are going to talk about how purchase department or the material department is going to help them. First one, new materials and products. So in order to survive in the market, every organization has to frequently understand what is the different trends in the market, based on which they have to constantly change their products. They have to constantly change their material. Okay, now engineering department will try to research on what are the different things which we can have, what type of material can we use, and all that. In the same case of an satellite, normally satellite is made up of those receptors which are normally made of steel and all that. Okay, but when someone suggests a material like Wolverine, which even though there is a tear on this, it can heal itself, it can close itself magically, such innovation is being widely accepted. In order to survive in the market, this is very much required. Okay, so when it's a new material or a product, engineering department always steps in to understand what is the new product which can be manufactured. Here purchasing department will go and help the engineering department. How? Even though they are planning like this huge big shot products, the actual cost of making this product, who knows it? Purchasing department knows it. So what do? They advise the engineering department, they advise the technical staff, saying that in order to make this new product of yours, we need so much of cost. Please understand that this is the market, because purchasing department would very well know how is the marketplace, because they deal directly with the suppliers, right? So they know how is the market, what is the price of each component of that new product, each raw material of the new product. They will let the engineering department know about this information. Once engineering department is facing the truth that this material might say cost a lot, then they'll think again whether to introduce a new product. So in a way, that purchasing department can help your engineering department in deciding whether to go for a new product or not based on the material cost. Okay, next is standardization. We'll learn about this concept in detail towards the end of this chapter. It means to say that you classify material into different groups: standard, substandard, semi-standard, and not standard items. Okay, which means to say that, see, in my place, like at home, for example, if I have too many things, it is very difficult to, keep it in an organized manner, to stuff it somewhere. If I don't have the space and I buy a lot of things, it's very easy, it's very difficult to understand where to keep it, and it is very difficult to, store it well. This is what I mean to say. Okay. But if I can eliminate few things which I feel that are not so essential, then I have the required space only for the essential items. So this is how standardization works. Engineering department and the technical staff, they set standards as to, they categorize material into, this is of standard thing, we can have this. This is substandard, you just move it aside for some time. This does not have any standard, we don't need this material, you can dispose it off. This saves you on the space. So they would give the solution from their end. What can the purchasing department do? They will collect those standards from the engineering department. They will go around the storeroom and see, okay, is this material required? No. Is this material required? Okay. Maybe we need more of it. So they get to decide on the standards which are placed by engineering and technical staff. I hope it is clear. Product improvement. Now the ways, see, engineering might give you a lot of data on how to improve this product, what are the modifications which is possible and all that. But the purchasing department will know that in order to bring about that modification in the product, what extra raw material you need, what are the extra costs involved, those would be effectively communicated by the purchase department to the engineering department. So in that way, engineering department will understand, oh, so these are the costs. Then we have to work on a different strategy. So you understand what I'm trying to say? All right. Interdepartmental harmony. So this material management is all about, you collect the requisition or the requirement slip from each department, what all do they need, and then you go make the purchase, you get it, and you distribute as per the initial requirement, right? This is what material management does. So every other department, be it your production department or any sales department, all of them should have a very proper coordination with your material management or your purchase department. Okay, so what do they have to do? They have to see to it, in order to get things done very quickly, we have different contacts here and there, right? Maybe when we go to a government office, if you know, or if you go to a bank, you know the manager well, you'll directly go inside the cabinet and say, oh sir, hi, can you just do this? And he'll be happy to oblige with this. So what can be done? If you have a proper relation with your purchase department, even on short notice, your requisition slips or your requirement would be taken as priority by the purchase department. That is why it is very important to have a interdepartmental harmony. You should be in good touch and in good terms with the purchase department, so that they can easily satisfy your requirements. Okay. Now the second last point is forecast. Now every month, especially for manufacturing ones, they set targets. They say this month we have to do 50,000 units. Next month we have to do 1 lakh units, and it goes on and off. Okay, they set it for each quarter, they set it for each month, all those happens. So what does the engineering department do? They tell them clearly, okay, you want to do this, right? You want to go for a very high sales, or you're planning to produce a lot of things in the future. This is the cost of the material which you require to increase your production. For your sale, even though your sales this month was 50,000, you're aiming at 1 lakh. See the cost which is involved in making 1 lakh products. If you're going for a new product and you're planning to sell it next month, see the costs which are involved. So even though there are different departments which will work on forecast, sales forecast, or they try to plan the production and all that, the actual figure or the actual cost of producing such an increased quantity or selling such an increased quantity is provided by the materials department. So that is why they would help in forecast, because see, you can't simply plan things. You need to understand what are the costs involved, What type of material do you require? Whether it is available in the market. All these questions, the answer is given by the purchase department or by the material department. Last one is acquisition. Acquisition, like we have a lot of cases of mergers and acquisition. Like yesterday, I guess, no, it came in the paper. Who? Allahabad Bank and Indian Bank is getting into a merger. Punjab National Bank is buying Oriental Bank of Commerce and United Bank of India, right? Syndicate Bank is merging with Canara Bank, Corporation Bank and uh, some other bank. Yeah, you guys can search on this. So almost 3 to 4 mergers are happening right now. Even though it is lockdown period, they are happening right now. Okay, so all of them are going to merge. So this merger and acquisition is where you try to buy in a company. Merging is where two companies join together and exist as one. Okay, so acquisition is very much there in almost all the industries. Yeah, Vodafone, Idea. Yeah, so the thing is, even in the manufacturing side, you have acquisition. So what can be done? You have to see to it whether the merger or the acquisition is going to benefit your company. For example, if mine is a textile industry, okay, and I'm planning to acquire this firm which also produces textile, and we decide, okay, if we both merge together, we can do something in the future. We can, set up a new venture. It would give us a better market share in the, entire market, and all that. Those things are being planned. Now, purchase department will see to it, because they have good contact outside. They deal with other companies. They deal with the suppliers. They deal with suppliers who are also supplying to different companies. When they know about the trade secrets, they know what their competitors are doing. They will advise the firm whether to go for the acquisition or not go for the acquisition. Okay, so these are your primary and secondary objectives, very important. Some of the explanation I got stuck in between, I'm so sorry, but I hope those were, you know you got the point. If you feel that explanation for any of the point wasn't proper, feel free to WhatsApp and let me know, especially in the class group. It would be more effective. I'll take that topic again. I have no issues. Okay, so I hope this class is clear. See you. Bye. Have a good day.